Hello everybody, this is Gabriel with a trend scan for this month. So this month is October and we've just completed the last monthly bar, which is this one here in September. So we're looking here first at the US indices, equity indices, then we're going to look at metals, energies, interest rate, the T-bill, then we're going to looking at the US dollar index. So here the the S&P stands for all those US equity indices, right? So what we see here, this spike down is the Corona spike. And we can actually see here how this was, in hindsight, this was only a test of the 21 moving averages. Well, we've even tested the 50 moving averages. But one of the golden rules of charting is as fast as price goes down, well, as fast it can go up as well. And that's what we see here. We see typical, which is typical for the futures market, right? Which is this V-shape shakeout or the V-shape turnaround. And it's a great example actually how difficult it is to change around or even disturb a super trend. Here on the quarterly chart, well, this is what I call a super trend. And we can see how this Corona spike down only what is left and seen on the chart, on the quarterly chart, is only a big wick. So the bears have not been able to push price below the 8 moving averages, right? The black line. So we have an open above the 8 and we have a close above the 8. So that's a very strong sign of the bulls. We only have a quick spike and a quick recovery here with the S. So this is still in super trend mode. This is a very strong EMA trend, and it's difficult to turn around these trends. And well, we've seen this spike higher, breaking to a new high, right? So after a new high, which is a stop run move, we can actually expect a pullback, right? And we've basically seen a minimum pullback I'm expecting, which is a pullback to the 21 moving average, the blue line. I'm actually waiting for a deeper pullback. I think this is more probable to see a deeper pullback because that's only a one leg. You can see it better on the monthly. That's only a one leg move. That's a momentum move. I'm actually expecting here a pullback, a deeper pullback. Well, if it doesn't pull further back, well, then we are making a new high, right? So then we can actually call this pullback completed. And then we might actually see that this market is starting to run away. Well, we've seen already a very strong up move here, but now we are overextended from the moving average from the 8. And if we make a new high now, well, then we might actually see an exponential increase in price, getting more and more overextended. And this is what I call a runaway market. Obviously, this offers great trading opportunities on the long side. So now let's have a look at the metals here, starting with gold. So in gold, we really had a nice buy signal last year. Last year, I think it was okay. Well, it was in June, and it was really a great entry signal here on system 2, the turtle. And we made our stop run move, breaking the consolidation high. So what happens after this pop up is, well, you get a consolidation, right? And I'm expecting actually here a deeper consolidation that would be healthy on this early uptrend. And what we've seen is basically the minimal consolidation. So back to the 21 on the weekly, and we see here, well, that's a pattern on the daily. It's not a pattern I'm trading because the rules are not fulfilled, but this doesn't mean that this is not going to start and run, right? So I'm observing this, and if we see a day bar close above the green line, well, then this is an early indication that this shallow pullback is actually over, and then with that we might see here an exponential runaway market too, similar to the ES. Now the silver chart, it's a small brother of gold, right? Much more volatile. Well, here again we had a nice entry signal during this Corona scare down that has nicely run for stops. And if you look at the pure pricing, well, it went from 15 to 30, so it basically doubled in prices. Right? This is well, there's another pattern here on the quarterly chart that is very bullish, and this can only be seen. Well, that's a stop. That's an early move, right? That's a stop run move. That's just the first leg in a multi-year uptrend that I think we have started with this entry here. Well, there will be a lot of more trading opportunities long, and I'm actually seeing this to develop well above 50. So again, here we've got a very shallow pullback to the 21. We might actually see here either a deeper pullback, or we might actually break to new highs. Well, then we can expect a runaway market, because all these levels here, we can see it better on the monthly. All these levels here are stop run levels that price is drawn to and then pushed through. So we might actually get surprised by silver that it develops much better than gold over the next couple of years. So Palladium is an interesting chart, because it was basically front running the other metals. It was a great chart to trade, because you can see here how this actually shows us how a runaway market looks like, right? It's an exponential increase. And back down here, well, we already spotted here in our masterclass this very important level. That's a stop run level. And as price came back here, back to the 21, well, it was taking in energy in order to break this level. And after this break, so this quarterly bar is a stop run move. Well, then it just continued in overall trend direction. And we can nicely see how this chart went higher and higher and higher, and we saw a ton of trading opportunities. Well, if you can catch an exponential move like this, well, you can make a lot of money, and a lot of patterns actually are showing up. And it looks like, well, this is the Corona spike again, and it looks like it's up for new highs. Now let's come to the energies. Crude. So I'm a bit unsure about what's going to happen with crude. Well, we've seen this, as you might remember, well, we've fallen hard below the $10 per barrel, right? Which is quite amazing, because we know we've been above $220 per barrel, like just a couple of years back here during the 2008 crisis. Well, I believe we've seen here the low, and well, what this is here, well, that's a dead cat bounce, right? After this exaggeration on the bottom, that's a dead cat bounce, and I don't know what's going to happen. We might actually see like another test lower, or it might be here a launching pad for an early uptrend. Let's have a look at gasoline RB, the RB contract. Gasoline gives us a different picture. You can see here how it's in an uptrend for quite some time, and we've got a pattern here on the monthly chart. It's an S1 pattern, and we've got a clear entry signal up here. So there's still some time for this to be achieved, but if price actually breaks this this green line, well, then this is then we can say that this long-term consolidation on the monthly chart that took basically 9 years, that this consolidation is over, and that we are starting a new uptrend from here. Well, that's a big risk, right? Well, you don't need to trade this chart. If you get an entry signal, well, you can as well trade lower time frames and benefiting from this overall signal. So I'm actually seeing here new highs. Natural gas is always a great contract to trade, because it's very volatile. It makes this big, well, it's overall down, but it makes these big counter trend rallies. We've seen it here, right? Get a lot of patterns in such a move. We've seen it here, like in lower time frames, obviously, and we've seen it here, and you get nice patterns on the way down. So currently it's at a critical level here at these resistance levels. We've got 3 touches basically. So if natural gas is able to break this level, well, then actually we see how natural gas will lose in value quite a bit, as we are in such a strong super trend down. Now let's go to the interest rate futures here, to the US 30-year T-bill. Well, during the crisis, we've seen a spike up, right? So this means that money gets into interest rate contracts and instruments. So we see this spike up as well here on the quarterly. We see the spike up, a big green bar, and since then basically price consolidated on a very high level right here on the weekly chart. We didn't get a pullback, but what we got is here is an S2 turtle pattern with a very tight stop. And I've marked here, this is the entry signal. Well, it needs to break the prior high, and then we have a clear stop down here. Well, if you go on a weekly, if you look at that on a weekly chart, we can actually see how tight that stop is. It's this blue box, right? This is the stop, and then we should actually see prices break above the last high, which means that yields should go down even more, which is quite amazing to think of. Now, the last market to look at is the US dollar index. So this US dollar index basically tells you if price goes up, the dollar gets stronger, and if price goes down, the dollar is getting weaker and weaker. I believe that the dollar is actually losing in value over the next couple of years, and that we're going to see something like this, right? So a devaluation of the dollar quite a bit. Well, if the dollar gets weaker, there's another pattern here. Well, if the dollar gets weaker, we will actually see how this has an impact on other commodities like precious metals, as well oil, and even US equities. So interesting times, and the futures markets are setting themselves up for big moves. And obviously, whenever something moves, that's a great trading environment for traders and investors. Thank you.